Hello everyone and welcome to today's major markets update for Wednesday, April 13th. The beauty of anticipate, monitor and adjust, because that is all we can do. And why when one door closes, another opens. Let's go straight to the charts and see what I am talking about. First things first, remember we were tracking this impulse potential higher since the February 24 flow. Again, the potential, and I already warned in the last previous updates that we didn't have that completion yet based on this Elliott wave count, and that all we can do is anticipate, monitor, and adjust. So what we do is after 5 waves up, remember back in late February, the webcast called I Spy with My Little Eye, 5 waves up. Well, they of course remain in place. Then we know that the financial markets trend higher longer term. They impulse higher longer term. So one has to turn relatively bullish once one sees 5 waves up. But 5 waves up are not necessarily the start of a new impulse. They can be part of a 5-3-5 type of B wave bounce, because B waves are made up of 3 waves. 5-3-5 A, B, C. Very simple. So that's what we're tracking. But we know that once we have 5 waves up, we should get the potential for 5 larger waves up, because then the small 5 waves up were wave 1. That's why we label it 1A, 2B, 3C. A lot of people, perma bears especially, will label it as A, a B, and a C already. But that is a crapshoot, and in this case they were right. That's fine, but eventually you'll be wrong, and that's not how we go about. I cannot do that with hundreds of people depending on my work. If you just tweet shit out, literally, fine. Label whatever you want to do, slap it on. We can't do it. We don't do it, remain objective, because we don't know once a new impulse starts if it's an A wave or a first wave, till the market proves one or the other. And that is then following a standard impulse pattern, and that needs to stay above certain levels. That's the beauty of Elliott wave. If-then scenarios. So we tracked it and tracked it and tracked it. Everything was going really nice and dandy. And of course, one prefers the bullish wave count, as I said, because market tends to trend higher, longer term, impulse higher, longer term. So when you see an impulse to the upside, the bullish count is preferred. Well, yesterday we got below the cutoff level. Okay, the cutoff level was, I believe, at 43986 or something like that, and we got as low as 4381, something like that. It's too low, so it can't be 4 and then a 5 to go. So see people somehow holding on to it, but unless this is an ending diagonal, it's possible, but I don't trust ending or leading diagonals. I don't trust leading diagonals. They're very difficult, and just the internal price structure doesn't really add up. So anyway, we anticipated, we've been monitoring it, and it failed. So now we have a door that closes. This wave count is off the table. This subdividing 1, 2, 3, 4, 5 is off the table. That opens up other possibilities. That's the beauty of Elliott wave, that we then open a other door, because the market is all about possibilities and probabilities. Okay, so the possibility that this is 1, 2, 3, 4, 5 is off the table. So it is possible that we have only completed a B, C of a larger B wave. I'll get there in a minute. Meanwhile, we know technology has done something else compared to S&P 500. Remember, each and every sector, each and every stock chart is in its own or major market wave count. All right, the semiconductors went already below their February lows. The IWM got close. Dow Jones is not even close, etc., etc. Everything is on its own. Doesn't make my life any easier. Doesn't make your life any easier. So we have to treat everything individually, and we can't slap just wave labels on stuff. It's all the same. No, it can't. Since we made a lower low in March compared to February for the technology sector, this is the regular Nasdaq, we then had 5 waves up that followed a reasonably nice Fibonacci-based impulse pattern. I've shared you this wave count before. Once we topped here, I believe late March, we then had 5 waves lower. Okay, that's been tracking nicely. So expect a bounce, and that bounce seems to be now underway somewhere to this target zone. We don't know yet where exactly it's going to top. I just give you the normal ideal standard target zone. It can go all the way to 14,400. It can stall at 13,800. Nobody knows. We'll have to track it. Once we bounce, then we should see another leg lower. So this starts to look like a zigzag lower. That is my preferred view for now. So now we're in this bounce. We should look higher, and then we should look lower one more time to complete wave 2. Same for the NASDAQ 100. I've had this on the chart for quite some time, so no surprises that we had 5 waves higher. Wave 1 was here on the Federal Reserve day. Wave 2 was the drop, and then 3, 4, 5. Essentially picture perfect Fibonacci based extension, and now it's dropping lower. This should be wave A, wave B, wave C. I originally hoped, anticipated is of course the word, we should stall at around 14,125, 150. We dropped a little bit lower, but we're back above it already. So I think this bounce is underway, and it will take probably a couple of days to weeks to complete. Just like the A wave took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days, 2 weeks, the B wave should now start. As I said last Friday, sentiment was extremely negative. That was the Friday conclusion, and we need a reset of that sentiment. I was expecting already on Friday and on Monday a reset of that sentiment, which will allow for higher prices. We cannot remain so bearish. It's bad for your cholesterol, bad for your heart, right? Smile, optimism, that's good. That's good for your brain. So the A, the B, and the C, target zone shown. Now we'll simply have to let the market fill it in. That's all. I cannot make it any clearer than this, all right? We just don't know yet where the B wave is going to top. We can look at support resistance. I only have one update so far. It's way too little, so we focus on this target zone. This is where we anticipate, and we then monitor it, and then we adjust if necessary. I have the B wave just arbitrarily placed here. I can place it here. So we anticipate the bounce. So far, so good. And then another drop. So far, so good. I mean, we don't even have information yet on the bounce. So I can't look around 2 corners at the same time. I cannot bend light. Okay, light moves in a straight path. So first up is higher. And how exactly that's going to go, it's going to be tricky, most likely 3 waves. All right, so we got the NASDAQ and NASDAQ 100 covered. No surprises other than that I anticipated a bottom ideally at around 14,125, 14,145. While Crimea River went a little bit lower, but again, the gist is quite similar. Okay, we have 5 waves lower and moving higher, and then 1 leg lower, because second waves always comprise of at least 3 legs, A, B, C. So we have already the A wave, now the B wave. All right, so then we look at the Dow Jones. By the way, one more thing. We already knew we would go lower once we broke below the bullish cutoff level, right? We had the bullish cutoff levels for the NASDAQ and NASDAQ 100 already invalidated on late last week, I believe it was, Friday, okay? It tried to stay above it on Tuesday, Wednesday Thursday last week, and then it failed Friday. So we already knew this, right? This is no surprise. Simply had to see if we could bottom a little bit higher, and it didn't. It fell a little bit lower. That's okay, but the general pattern remains the same. That anticipation remains the same. Now moving on to the Dow Jones. The Dow Jones so far has not overlapped its bullish cutoff level. The bullish cutoff level is at 34,096. We bottomed yesterday at 34,102. Okay, so 6 points, no overlap. This can still move this way. How are we going to resolve this with the technology sector, all that stuff? They don't have to be aligned at all. Okay, we really, once we talk about the Dow Jones, you have to forget every single other index as if they do not exist. It's really hard. Your mind's probably trying to play tricks on you. If you can't do this, it's first level of intelligence, right? Being able to hold 2 opposing thoughts in your mind and still be able to function normally. Most people utterly fail, especially those from a certain political spectrum. It's fine, but we have no overlap. This is still possible for the Dow Jones. How can we resolve that with the technology sector? Well, the bounce here for the technology sector can lead to the wave 5 here in the Dow Jones. Remember that the Dow Jones topped pretty much January 4th, right? Technology sector topped already in November. way different. All right, we're way different. So the technology sector is leading in the sense it was leading the top. So now it might be leading in the next bullish phase. Longer term, I remain bullish. Whatever the market wants to throw at it, I still remain bullish. So this is a bullish resolution. As long as we stay above 34.96, it can move higher. Note the Dow Jones did not go over the bullish cutoff level or below it, but the S&P 500 did. Here is then the other option, which is an alignment with that of the technology sector. We completed wave A, we're now in wave B, and then wave C. Okay, we should not go up above 35,000, honestly. If we start going above 35,000, I'll start to decrease. This looks like a nice ABC zigzag, and then this is a leading diagonal A wave. Okay, I have painted it in here, 1, 2, 3, 4, 5, and this is then the bearish resolution for the S&P, the Dow Jones. I know it's like, well, here you say higher, here you say lower. I'm presenting the possibilities that now are on the chart because of the fact that a lot of indexes, sorry to be so, are overlapping. So we have these possibilities, okay? This is very, very simple. And this fits with what I said on Monday and Friday. Please remember, we're still trying to figure out if we are still in a correction or already in the starting gates of a new bull market. So things are still a little bit up in the air. There's no real trend. We're not making new all-time highs, all that stuff. It's preferable actually to buy stocks at new all-time highs than at new 52-week lows, because trying to catch a falling knife will cut your fingers off. So this is a possibility as well. Okay, but remember, we have not dropped below the 34.96 level. So that is still the line in the sand for the Dow Jones. And this one looks ultimately for a potential C wave lower here. This would be the analog to the 2015-2016 path. Okay, I think for now, shorter term, a little bit higher for the NASDAQ 100, potential new all-time high of a new uptrend high for the Dow Jones, and then lower. So we'll have to follow it along. This is why we anticipate we monitor this. Remember, this is for the Dow Jones, not any other index. This is not for the semiconductors. Not even close, okay? Do not confuse any index with one another or try to force fit anything, okay? Here then is the S&P 500. We already established that we breached the cutoff level. We went too low, so it cannot be a fourth wave anymore. I'm not gonna stick a fourth wave label here just because I want it. No, price told me that we've reached too low, and then it is off the table. It is off the table for this 3, 4, 5 more pronounced impulse higher we were tracking, as I showed you here. This one is off the table. This 1, 2, 3, 4, 5. This one is off the table. So we can then say we might have had a potential truncated wave 5. I don't like it so much, but it is very possible. Okay, very possible. So then what was this 5 waves higher? Was it A, B, a C, of a 4, of this large ending diagonal C wave? And we are now bouncing similar to the NASDAQ100. Okay, so similar type of pattern. Regardless, I'm going to look higher now for the next several days to weeks for this bounce. And we eventually know soon enough if it's this path or if it's this path, right? So we bounced. This is the 2015-16 analog. And we're going back to about 4,000. So this is the path. Bounce and then drop lower. We'll know eventually if we drop below, of course, yesterday's low after the bounce, then this path is in play. Okay, if we drop below yesterday's low, but we don't go below the March and February lows, then this path is in play. So that's really, really simple. And how this then aligns with the Dow Jones, it's fine. I showed you the path for the Dow Jones. Nothing to worry about. IWM remains like ABCs in my humble opinion. Don't know yet how to resolve itself. It's still not easy. No new uptrend highs, just a good strong candle. One index I really like though is the semiconductors. This starts to look pretty constructive. We got pretty oversold here yesterday, and that often means that we are getting close to a bottom. And so far, so good. If we get this oversold, we often get very close to a bottom. So I'm starting to look here for this primary 4 low. We simply made, I would say, a secondary low compared to the March lows. So this starts to look pretty constructive. But one day doesn't make a summer yet. We need a lot more price information. We can still move lower to the 2900s. It's absolutely possible. But honestly, from a risk reward perspective, in my humble opinion, this indicator of all indexes is one of the better ones. Now, again, look where the semiconductors are versus where the S&P 500 is. The S&P 500 would, according to the semiconductors, be here. And same for the Dow Jones. Look where the Dow Jones is, right? It's a much better index, stronger index than the semiconductors. So the Dow Jones is called the bellwether of all indexes. So this one is actually giving a reasonably good view on the market and the economy, of what the market thinks of the economy, so to say. Semiconductors is just one sector. A lot of things going on with the semiconductors. That's fine. But again, just wanted to show you this difference and the different wave count and how they eventually can align for tops and bottoms. But we're not going to slap, of course, the same wave labels on different indexes, because it's impossible. You cannot do that for the semiconductors. So please keep that in mind. Okay, so again, we anticipated 5 waves. We monitored for 5 waves and we didn't get it. So that path for this more pronounced 3, 4, 5 is off the table. Then we still have this potential 1, 2 setup for the technology sector in place, that we're now in a bounce, 1 leg lower, and then we move higher. These are the target zones. I have too little price information available to know exactly where the bounces are, so I'm just giving you the target zones. But this is a very powerful tool, of course, because forewarned is forearmed. You kind of know what to anticipate over the next few days to weeks. This is the path we're going to anticipate. Same here for the NASDAQ100. No surprises yet. Very oversold. Rally time or bounce time, and then another leg lower. Would fit here with this potential for the Dow Jones, 1, 2, 3, 4, 5. This is my preferred view for the Dow Jones. This is also very possible. Second preferred view, A, B, C. We'll know soon enough if this one happens. And then the least likely, in my humble opinion, is this one, which would be akin to the 2015, 2016 scenario. Wouldn't surprise me that something else, but we'll track it and we'll monitor it. I simply can't tell you, of course, already ahead of time which one it is. I know other people will tell you for certain that this is what it is. Great, you just slap labels on stuff in pure biased opinion, but we don't know. We really can't tell that with certainty yet. So we're watching the price levels. We'll know soon enough. We'll track them. We'll anticipate them. Again, for now, the preferred path is higher, not lower. And all of these resolve eventually higher also, right? If this is the 1, 2 setup, we get 3, 4, and 5. If it is this setup, we'll eventually go higher as well, and we won't go much below the February, March lows, not by much, okay? Not at all. And then we still get a rally, because so far the decline is still overlapping, messy. IWM, don't know yet how to resolve all of this. But for now, I think it's constructive to look a little bit higher. Semiconductors, I like it that we are getting closer to a potential low here, but we definitely need a lot more price data, but the risk reward starts to look favorable. That said, all right, yada, yada, that one is not necessary. So when one door closes, another one opens. All right, in italic and capital letters are the previous updates summaries. We were tracking the more pronounced 3, 4, 5 setup for the S&P 500 and the Dow Jones, and it got invalidated for the S&P 500, not for the Dow Jones. That said, the NASDAQ100, I still prefer the wave count shown that wave B of wave 2 would reset sentiment is soon underway. Well, we got 5 waves lower from the recent high. I think wave A of 2 is complete. Now wave B of 2. See the price chart for targets. S&P 500. Well, as I said, we got the overlap for the S&P 500, not the Dow Jones. So I'm now tracking the Nasdaq and NASDAQ100 analogy versus 2015, 2016 analogy for the S&P 500. Regardless of how this is going to play out, I remain long-term bullish on all these indexes. Okay, semiconductors, I said, looked better with the revised wave count for an impulse lower of wave C of 4, and starts to look like a potential primary 4 bottom is forming. We have lots of positive divergence, but we need a whole lot more of price data. Okay, so again, it's early stages. but it starts to look good. Again, the risk rewards starting to move towards the reward, in my humble opinion, based on the technical indicators or wave counts stuff. IWM remains a mess, still the case because we're still tagging on ABCs, upside, downside. And again, this larger complex wave 4, akin to the 2015-16 major 4 correction, is still on the table. So it's still out there. We closed the more pronounced 3, 4, and 5. The Dow Jones is clearly in a potential 5 of 1 setup still, because it did not breach below the bullish cutoff level. So we're going to treat every single index for its by itself, and we're not going to slap any different labels on it, but we keep an open mind. And for now, I'm going to look higher for this bounce. And once the upside targets are reached, it's time to start to look lower, either for a C wave or a potential third wave. So I think that looks all pretty good. We have a good general path for the next few days to weeks. And with that, thank you so much for listening. Take care, trade safe. See you all on Friday. Bye.